The stock market is soaring. The VIX Volatility Index is falling. I wanted to put a trade on for UVXY, the ETF against the VIX, because we've got economic data coming in that's probably going to show that the economy is continually moving forward. Employment numbers come out. They come out tomorrow morning. It's still mid-market right now on Thursday, and I want to get this video up as quick as I can. My expectation is that we get a strong number, not necessarily too strong, but one that continues to reiterate that this economy continues forward. And because of that, the type of position I'm going to put on for UVXY stock will either expire worthless, giving me a small profit, or I'll see a jump in my favor if there's a move lower in the stock market with bond yields shooting up. Let's break down UVXY stock, and I'll show you what I'm looking at and how I plan on playing the VIX going into tomorrow morning's non-farm payrolls number. Here's a look at the VIX, the volatility index itself. You can see a small move higher over the past couple days, but this has been settling down. Federal Reserve Chairman Powell basically reiterating what was said in the most previous Federal Reserve Board meeting. I didn't expect too terribly much to happen with his testimony before Congress, not by himself. But he did kind of reiterate that the Federal Reserve is not in any kind of hurry to lower interest rates. The market, of course, took that and started running as fast as they could to buy even more, thinking, well, that means you must be going lower. And I don't necessarily believe this. And I know I'm sort of on the outlier on that, and that's fine. But this economy continues to move forward robustly. And here's my take on that. At the very least, the Federal Reserve won't lower interest rates sooner rather than later. They are going to have to take some time before they can lower interest rates. But right now, we're neither in an accommodative nor restrictive area for interest rates. The Federal Reserve has no real reason to lower interest rates given how strong the employment numbers are. Why would they lower interest rates? Because of that, I think the market really has it wrong because they're sitting there saying, nope, the Federal Reserve is going to lower interest rates. Otherwise, they may derail this economy. The economy continues to expand. Now, there's some outlying factors. China is going to be one of them. The rest of the world, we're seeing inflation numbers for the rest of the world dropping with expectations dropping below 5%. Which is nowhere near the 2% target that the Federal Reserve is looking for. So there's still a lot of inflationary pressures going on. Take a look at mortgage demand for the previous week, shot up 11%. 70% of the inflation we saw with that big spike was housing. So we're seeing a big move in housing, mortgage demand jumping like it is. Prices for housing will continue higher. The Federal Reserve is going to have to handle that as a situation. Lowering interest rates is not the fix for that. So this is where I'm kind of sitting with the economy right now, that it's pretty robust. The Federal Reserve does not need to lower interest rates. So anybody who's betting that the Federal Reserve is going to lower interest rates, I think you're on the wrong side of that, although I'm not exactly right now. What I do is I front run these numbers knowing that, wow, the market will see it and say, wow, that's a big number. The market will sell off for a moment. I'll take my profits. Then the market just basically ignores everything and keeps going. Great. I'll take my game the way I play it. In the meantime, UVXY stock is one of the volatility ETFs. I know there's several. It has been settling down. My position on this, I'm trying to sell $6 puts 1 month out, while buying the 750 calls. So what I'm looking for is about $1.50 above the market to buy those calls, and then I'm going to sell those puts, but I'll probably do a ratio selling 2 puts to buying 1 call. I'll take a credit. I might do 3 to 2 to kind of balance things out. But the market knows better. The market knows that $6 probably isn't going to happen. The nice thing is that the market, the UVXY stock itself is settling down somewhat, and it's getting closer and closer to that 6. So I'm probably going to get triggered here before the end of the day. I'm already in a portion of the calls. I'm trying to fill in a couple different areas for that for UVXY stock. Again, my take on this is that the number will come in, bond yields will spike real quick, the stock market's going to drop, and because of that, the put-call ratio is going to skew, and then the volatility index will shift as well. Looking at the put-call ratio, no one thinks that this market is going lower. And that's a sign that, if nothing else, the put-call ratio will spike higher with any kind of movement, and because of that, my position works out. And that's really what I'm kind of looking for, is because the put-call ratio is so low as it is right now, the mathematics on this, it's really kind of a concept when you start looking at the total volume of puts versus calls, and all of a sudden, if there's a 20% jump in both, or a 20% jump in the puts only, the VIX itself will spike. UVXY stock continues higher as well, along with the VIX. So this is how I'm playing this, and I'm going to continue to kind of put on positions like this over the coming weeks while we're looking at various economic data points. We've got inflation numbers are coming, or just around the corner. I do not believe, just like we saw last week, that the inflation numbers are going to fall as fast as the Federal Reserve would like. And because of that, the Federal Reserve is probably going to continue to kick the ball down the road, at the very least saying we're in no hurry to lower interest rates. And eventually, after a while, 2024 rolls on through, and the Federal Reserve still hasn't lowered interest rates. But if we start to see inflation popping up a little faster than the Fed would like it because of housing or other outlying factors, then all of a sudden the market takes a dump. But my position is pretty much a short-term position. I'm trying to get in, get out on this economic piece. I will do exactly the same, front run the inflation numbers. I'm pretty sure they're next week. I'll be checking in that. We have a couple more data points that I'm continually looking for, and I always get in front of them, wait for the numbers to pop up, and then the market turns right back around, giving me the same opportunity. Eventually, there will be a big move. I don't see that happening just yet, not until probably after summer. So I'll just continue to, pick up pennies basically. My time frame, more than likely, I'm out on Friday. The number hits my time. It's actually 8:30 New York time, about 6:30 my time. I'm in Mountain. I'll probably be out by, say, noon New York. That fast. And if I can sell those puts for a certain amount and they deteriorate rapidly and that call jumps a little bit, maybe I make about 20 to 25 cents, maybe 30 cents. I'm not sure how much, but I'll take that and I'll run real fast. Make sure to hit the like and follow button if you like breakdowns on UVXY stock and the VIX, broadly speaking, especially coupled with economic indicators and how that plays in the market. We'll see you in the next video.